We are Mike and Kelly Platt, and we are the principals of Inside Public Accounting. We want to welcome you to our discussion today on best practices to complete the IPA survey. Our intention is that your investment of time over the next hour or so will save you a significant amount of time when completing the survey, and hopefully will connect some of the dots, highlighting the connection between you completing the IPA survey and your firm improving its understanding of its strengths and weaknesses, understanding the competitive landscape, and providing insights into key industry analytics and key industry metrics. Before we begin, let me go over some quick housekeeping with regards to today's session. This session is being recorded, so you will be able to access it on demand as you begin completing the survey. We will send a link to the recording to everyone who participates in this session. There are participants from CPA firms all across North America in the session today. To help everyone hear well, we've initially muted all lines. If you have a question as we proceed today, you have several ways of asking it. Either send a chat message through your webinar window at the lower right-hand corner to the organizers, or look for the icon to raise your hand and we'll unmute your line so you can ask the question. The session is not available for CPE, but as I mentioned earlier, our intent is for your investment of time today to save you a lot of time later and to help improve your firm's operations to impact the bottom line. So let's take a look at a few best practices to address from the start. You've received the IPA survey by email. Your firm has determined that you will be the point person in getting it done. You've added it to your to-do list and you've put the deadline on your calendar. What can you do now to make the process as efficient, as accurate, and as valuable to your firm as possible? Number one, confirm your firm's participation. To ensure that you're on IPA's radar screen and to avoid any unnecessary reminders, please send an email to survey@plattgroupllc.com to confirm that your firm will participate in the survey this year. Number two, start now. Regardless of whether your year end is December or June, there's a large portion of the IPA survey that you can complete today. Get a head start on the deadline by starting now. Complete the questions that are not dependent on your year-end numbers. A lot of you with December year-ends already have the year-end numbers, so now would be a really good time to start. Number three, consult the definitions. They are there not only to help you understand what the survey is asking for, but also to normalize the responses so they're more comparable with other firms. Be sure to check the Survey Definitions tab for explanations of what the survey is asking for specific. Number four, identify the resources in your firm that can help. Review the questions and make a list of the various management reports that you'll need to consult to complete the various sections. Also, determine if there's someone else or multiple people in your firm that may have quicker access to accurate information, and consider parsing out that section of the survey to them to complete and send back to you. And number five, consider tracking the information that you're currently not tracking. The IPA survey has been developed over decades of consultation with practitioners and leading consultants on the kind of information that is most helpful for leaders of CPA firms to know. If your firm is not measuring or tracking some of this data, you may consider how it could help you if you did. So let's start with a quick frame of reference regarding the IPA survey. The IPA Survey and Analysis of Firms is a comprehensive benchmarking survey that covers key financial and operational performance measures. We're anticipating about 600 accounting firms participating this year, making the populations you can compare yourself to both robust and more meaningful. We are working with many different accounting associations to help streamline the survey process and to reduce survey fatigue on your end. We're using the same survey for the larger IPA benchmarking report. So the good news is for those of you with an accounting association that we're working with, you'll only have to fill in one survey form. For some associations, know that participation is a condition of membership. Our audience of participating firms is primarily the top 1,000 accounting firms in the country, so your numbers will be aggregated with other firms of your size for relevant analysis and relevant benchmarking. So let me switch over to the actual survey form itself, and let's take a look at how the IPA survey form is laid out. When you open the email from us and click on the Excel spreadsheet, you'll be taken to a welcome page with instructions on how to fill out the form, deadlines, and how to submit the form. Your deadlines will be clearly stated here on the welcome page. Some associations have early deadlines to ensure that their data is ready for the spring meetings, and your assistance in meeting these deadlines will be crucial. Here we see the general deadlines for submission are May 2nd for firms with a fiscal year end of July through December, May 16th for those with a fiscal year end of January or February, and June 3rd for those with a March or April year end. If your year end is May or June, please be sure to contact us. Also, if you're with an association with an early deadline and you have an April, May, or June year end, please contact us to discuss your situation. As you look through the welcome page, you will see various instructions, guidelines on what to do, how to fill out the form, and best practices to follow. To get to the actual survey form itself, click in the area in blue at the bottom or on the actual IPA survey form tab in the same color, and that will take you right to the data entry area. A couple of quick comments on the tabs before we get to the survey itself. This second tab is the IPA data entries survey form, which we'll come back to in a second. The next tab is a helpful guide to definitions, so we're all providing comparable information. We encourage you to refer to this tab when completing the form. And finally, the last tab, Firm Clarifications and Notes, is a place for you to provide clarifications or further explanations of an answer if needed. So let's go back to the IPA survey form tab. Over the last few months, we have worked with focus groups, reaching out to various managing partners, CFOs, and firm administrators who are just like you to get input and feedback on ways to enhance the IPA survey, ways to define the questions better, and ways to make responding much easier. For the remainder of our time today, we'll go through each section, highlight changes that were made from last year, and focus on the areas that have given firms the most challenges or areas where we find the most common mistakes occur. Again, if you have any questions along the way, feel free to chat with us in the lower right-hand corner of the screen, raise your hand, or send us an email. Okay, here we go. Throughout the IPA survey form, starting on row 8, everything in white is an input field, and you will be able to enter your data there. This first section covers firm information. Let me call your attention to rows 8 and 9. You are the expert in your firm, not us, so please help us by putting your firm name and the managing partner's name exactly as you wish it to appear in print. Anything you put in this field will be considered your approval for how it should appear. Rows 15 and 16 tell us how many offices you have and what the change was from last year. If there were no changes, please enter 0 on row 16. In row 17, be sure to tell us not only the month and day of your fiscal year end, but also the year that you are reporting. Our contact information is here in case you have a fiscal year end after May of 2016. Let's go down to this next section on firm survey contacts, row 20 through 26. Be sure to give us the name of the contact so that we can go back to with any questions regarding the survey in row 20 and 21, any accolades to go to the marketing contact in row 22 and 23, and to the person who will receive the complimentary summary in row 25 and 26. On to our next section in firm memberships. On row 29, notice the drop-down arrow here. This indicates that there's a drop-down menu with selections to choose from. These drop-down menus are used throughout the survey, so anytime you see the down arrow when you are in a cell, be sure to click on it. Rows 38 to 43 deal with mergers and acquisitions. Complete this section only if you acquired another accounting firm during the year reported. If none, please put a 0 in row 39, type 0 in row 39, and don't worry about filling in the others. In row 43, let us know if you reported any mergers or acquisitions in the prior year. Again, let's look at the definitions tab to find out what we're looking for here in rows 39 to 43. As you'll see, the definition for mergers and acquisitions do not include lateral hires, professional staff, or partners that were hired from another firm with a book of business in the area regarding mergers and acquisitions. M&A should be considered the acquisition of a firm with partners and staff, and that should be what you focus on. All right, let's go back to the IPA survey form. And let's take a look in row 43 again. If you had a merger in the previous year to the fiscal year you are reporting, please indicate so here. Moving on to the section entitled Financial Information. Let me point out some distinctions that will be important to remember. In row 46, we ask for gross revenues of the firm. Some firms tell us that they don't track this information, but we believe all firms should. Total gross revenue from all entities at the firm's year end, net of client reimbursables, is the number we're looking for. Subsidiary revenue should also be reported. If the CPA firm owns less than 100% of the subsidiary, include the percentage of revenue equal to the percentage of ownership in the subsidiary. The actual dollar amount for gross revenues should represent all the revenues that your time and billing system says you should charge at standard rates. Report accrual basis net revenues before bad debt write-offs. Let's go down now to row 47, focusing on net revenue, which is the actual billed amount, net of actual client reimbursables from all entities, which were included in the firm's gross revenue number. Write-ups and write-downs should be included in this number, but bad debts should not be. Row 48 asked for organic net revenue growth percentage from the previous reporting year for organic growth only. Please do not include the effects of mergers on net revenue percentage change for organic growth. Revenues from existing clients brought into the firm through lateral hires is considered organic growth and should be included here. Row 49 asked for total net revenue growth percentage from the previous reporting year from all sources of revenue for the firm, which includes mergers. If you had no mergers, row 48 and row 49 would be the same. Row 50 asks for the percentage of the firm's net revenue derived from something other than charge hours. Many firms provide services that generate revenue regardless of charge hours, such as revenues on assets under management or success fees over and above the work performed. please indicate the percentage of the firm's total net revenues derived from something other than charge hours here on row 50. If none, please enter 0%. In this next section, net revenue by service area starting on row 51, we're looking for a breakdown of total net revenues by service area. Please be sure to complete this section based on each service area's net revenue, and be sure the total that is automatically summed in row 71 is the same as the total in row 47 net revenues. If you have services that are not listed here, please enter the dollar amounts and names of the service or entity in rows 68, 69, and 70. Notice the fields in white on rows 68 through 70 in column C. This is where you can tell us the names of the other service areas. This next section, starting on row 72, industry niches. Here we're asking for the top 3 niches as a percentage of net revenue. Please indicate the top 3 industry niches of your firm based on total net revenues derived from those niches, if applicable. Again, here we've got the drop-down menus, and we are specifically looking for industry segments, not service segments. If an industry niche is not provided in the drop-down menu, please select Other at the very bottom of the drop-down menu and define it in column C of the appropriate row on the Survey Input tab. Rows 74, 76, and 78, please indicate the percentage of the total net revenue of the firm that niche provides. Rows 80 to 82, any new niche practice areas that you're looking to launch in the current fiscal year should be added on these rows, row 80 through 82. Let me pause for any questions related to the firm revenue section or anything that we've touched on so far. Again, if you have any questions, go to either the questions tab or send a question in the chat box, and we will address the questions as we go throughout the session here. So if you don't get a chance to do it right now, we will address your questions as we pause several times throughout the session. So seeing none coming in right now, let's move on to the firm net income area starting on row 84. In row 84, we're looking for the total net income of the firm prior to any equity partner distributions. Let's again jump to the definitions tab for clarification on what we're looking for in row 84. Row 84 includes the net revenue, which was in row 47, less expenses. Include among the expenses payments to non-equity partners and payments to retired partners, but do not include as expenses any unique equity partner benefits such as car allowances, salaries, compensation, or return on capital of current equity partners. So again, with any questions that you've got as to what we're looking for specifically, be sure to jump back to the definitions tab. Let's go back to the IPA survey form in row 85 and 86, which asks for the organic growth and all growth of net income from the previous fiscal year. Similar to the net revenues, organic growth should not include the effects of mergers on net income percentage growth. However, income from revenue from existing clients brought into the firm through lateral hires should be included in the firm's organic growth. The all growth number in row 86 includes all sources of income, including mergers. If you had no mergers, row 85 and row 86, again, would be the same. In row 87, we want to know how much of the net income is expected to be distributed to equity partners either during the fiscal year reported or in the first few months of the current fiscal year to equity partners in the form of compensation, bonuses, unique benefits, profit sharing, etc. If all of the profits are earmarked for distribution to equity partners, this number would be 100%. Row 91 asks for realization rate, which is defined as the total amount billed divided by the actual charge hours times standard billing rates. The numerator here would be what was actually billed. The denominator would be all charge hours before any write-offs multiplied by full standard billing rates before any write-downs or write-ups. This metric is a measurement of several things, including chargeable time that was not recorded, captured time that was not billed, and billing rates that were different up or down from standard rates. It also is an indication if you divided just net revenue by gross revenue, it should roughly give you a realization percentage, unless you've got other dollars that are coming in from non-hour oriented charges. All right, let's move on to the accounts receivable section here, starting in row 93. This area is pretty straightforward. Total accounts receivable in row 93 on accrual basis, and please include any allowance for doubtful accounts when providing a number for row 93. In row 95, we're looking for total unbilled work in progress, and that number too should be adjusted if applicable for any additional potential write-offs or potential write-downs to reflect the truer value. Please report this number based on what you expect to bill it at so we can have a more accurate picture of the value of your work in progress. Starting on row 97, this section focuses on firm costs as a percentage of the firm's net revenue. Starting on row 99 through row 104, it's a snapshot of some of the major areas of expenses that are of interest to firm leaders. It's not intended to be a complete income statement. And what goes into each bucket is not mutually exclusive. For instance, a marketing director's salary should be included in the firm-wide personnel percentage on row 99 and should also be included in the marketing costs on row 101. The same will apply for a technology director. They should be included in row 99 and also in the technology section in row 102. In all cases, please do not include any equity partner compensation, time, or unique benefits in any of the calculations rows 99 through 104. In all cases, please report as a percentage of the firm's total net revenues when you put into row 47. For complete definitions of what goes into each bucket, we can take a look at the definitions tab. So starting on row 99, it will tell you what we're looking for in each of the various areas of firm-wide personnel costs in row 99, professional liability insurance costs in row 100, marketing costs in 101, technology costs in 102, professional staff training costs in 103, and recruiting costs in 104. Let's go back to the IPA survey form and starting with row 106, office space. This section identifies the total office square footage that your firm owns or leases. If the firm is obligated for space that is not being utilized, please include it on the overall square footage for the firm's fiscal year. If the firm has office space that is being subleased during the firm's fiscal year, please exclude that number from rows 106 through 108. And since some firms were having trouble having their owned percentage plus the lease percentage add up to 100%, we've done that for you. All you need to do is put in the percentage of office space your firm owns, and we will make the assumption that the remainder is what your firm leases. Starting in row 109, firm capital. This is the classic accrual basis GAAP definition. Assets minus liabilities equal capital. This is the equity partner's equity in the firm, partner's capital in a partnership, and members' capital in an LLC. Please exclude any liabilities for retirement obligations and any funded retirement assets. On row 111, we are asking if that number has gone up, down, or remained the same. So what we're looking for here is the partners have to put any additional capital into the firm for last year. This really doesn't have to do with the partner's draw amount, but with their total compensation. If the net income of the firm was not 100% distributed to partners, but some of it was held back for increases in capital, then partners' capital requirements would have increased. Again, check the definition tabs on 110 and 111 for what we're looking for here. Let me pause and see if there are any questions before we move on to the next section. Okay, seeing none right now, let's take a look at this next section, what we call the matrix, rows 115 to 135, because this is the most common area where firms struggle, causing us to go back to firms for clarifications. In column B, we've got the different classifications of the kinds of partners, non-equity partners, client service professionals, and non-client service staff identified in each one of the various rows. In column C, we are looking for the number of full-time equivalents for each of these various sections. One of the questions we get most often is how to calculate full-time equivalent. For IPA's survey, we're looking for the full-time equivalent count of the people available to you during your fiscal year. FTE cannot be more than 1, but can be less than 1. FTE should be based on a 2,080-hour year. If you have a full-time person that started on July 1st, for instance, they would be considered 0.5 FTE because they were available to you for half the year. If you have a full-time person who works 30 hours a week, they would be considered 0.75 FTE. If you have a partner who was admitted on October 1st, please consider them a 0.25 FTE for your fiscal year end. So you'll see with the numbers that are put into column C, those will be totaling in those shaded areas for total equity partners, total non-equity partners, all the way down through to the firm-wide totals in row 135. Looking at column D, please indicate the total charge hours for each staff grouping in this column. And what you'll see here, if you put in a number that just doesn't make sense, and let's put in 10,000 into the charge hours for the 2.25 equity partners, note the pop-up warnings and the per person summary on the right. The pop-up warnings will tell you that what you put in has led to a calculation that doesn't make a lot of sense, and you have the option of either overwriting the warning or just cancel, and you can go ahead and put in the correct number instead. Let me also bring your attention to the far right-hand side of the form, columns L and M. This is a checking mechanism that we have put in that will help you assess the validity of the entries that you're making. Here in this case, with 2,500 total charge hours among the equity partners, the 2.25 equity partners, that comes out at 1,111 per partner. This will just help you in seeing whether the numbers that you gave us make sense in terms of a per employee number. In column E, we're looking for total work hours. So be sure to exclude any and all paid time off, which would include vacations, holidays, sick time, and jury duty from all the totals. Again, we have a built-in mechanism there, so if we put in a crazy number like 41,000, then we can see that the number will pop up, the warning will pop up. You have the chance to either override it and tell us it's correct, or you can cancel it and give us the correct number. In column F, we are looking for average stated billing rates for the group. So if you've got, again, a number of different billing rates for the partners, please give us the average billing rate here. Column G is looking for average compensation for the individuals in this group. Again, looking at the definitions tab, you will find definitions for what we're looking for in row 119G, or let's go up a little bit. So we'll have equity partner compensation in row 118G. Including salaries, guaranteed payments, bonuses, commissions, or other discretionary allocations from all entities, and return on capital, which includes the interest payments. Exclude any retirement contributions and non-unique benefits here. In row 124, when you're putting in the compensation for the 0 to 2 year experience people, please do not include intern compensation, as it just skews the results. Next, I want to call your attention to row 131. Please note that this is not part of the auto-summed fields that are being added in column C. We want to know, of those professional staff in the total in row 130, how many of them are CPAs? And again, we're looking for full-time equivalent numbers here. So as you complete the matrix, everything will auto sum on row 135. You will be able to look on column L and M to make sure that the numbers that you gave us make sense for your firm. And if you don't have anybody in a particular area, leave column, put in a 0 in column C and leave columns D, E, F, and G blank. All right, let's go down to row 137 where we start talking about professional staff turnover. Row 137, we are looking for a percentage. This is the percentage of full-time equivalent professional staff, which includes all professional staff, all paraprofessionals, and all partners who left the firm during your fiscal year, divided by the number of full-time equivalent professional staff at the start of your firm's fiscal year. Please exclude all interns and all seasonal staff in the calculation for row 137. Again, flip over to the definitions, and this will give you the full explanation specifically of what we are looking for. Rows 138 and 139, we're looking for an full-time equivalent number. This is for voluntary and involuntary turnover. What we're looking for here is the full-time equivalent number of professional staff, same definition, all professional staff, paraprofessionals, and all partners who left the firm on their own. And again, be sure to exclude all interns and seasonal staff from this number. Professional staff who left on their own should be counted in row 138, and professional staff who were let go by the firm should be included in row 139. So 4 things to keep in mind for this section. Number 1, be sure to report a number, not a percentage, on rows 138 and 139. Number 2, be sure to report based on FTE, not headcount. Number 3, be sure to report only turnover of professional staff, not administrative staff. And number 4, be sure to exclude all interns and seasonal staff from your calculations. Row 140, we're looking for average length of employment in years of the professional staff. So let's exclude the equity partners and exclude administrative staff in this number. And then in row 141, the average annual CPE hours for professional staff only. And here, please do include partners. It's highlighted in the question, pretty easy to understand there. In this next section, internal firm operations, this section identifies the professional management and administrative positions within the firm. Please notice that we've expanded the drop-down menus this year to get a more accurate picture of who is serving in this role. The options now are that yes, you have someone in that role full-time who is not a client-serving partner. Yes, you have someone in that role who's part-time, but not a client-serving partner. Yes, you have someone in that role and they are a client-serving partner. Yes, you have someone in that role, but you're outsourcing that to an individual who's not employed by you, or no, you do not have anybody filling that role whatsoever. Please note where we're asking for annualized compensation. All of this salary information will be kept confidential and will not appear in any IPA publication. Include the salary, bonuses, overtime, and commissions for all the individuals in the internal firm operations area. If the person is less than a full-time equivalent, please annualize their total compensation. So if they're only working half of the year, or 20 hours a week, and you're paying them, let's say, $25,000, please go ahead and make that $50,000 instead, and just make it annualized. If you outsource that role, please include the fees paid directly for the service and don't include any other costs other than the compensation for the outsourced professional. If available, please also provide the years of experience and years with the firm for the outsourced professionals. So the years with the firm would be the years under contract with the firm. And use the firm clarifications tab if needed to expand on any of your answers. On the Chief Executive Officer, row 148, the CEO position is not the managing partner role. What we're looking for is a professional administrative executive brought in to run the firm so that the partners can focus on client activities. So please indicate there specifically that we're looking for an administrative CEO who reports to the managing partner and not the managing partner himself. All right, so here just select throughout the administrative positions here whether you have someone on staff or not. And let's move down now to the next area on firm ownership. Here we're asking for partner compensation, and again giving the definition both in row 194 as well as in the definitions tab. We're looking for salaries, guaranteed payments, bonuses, commissions, or other discretionary allocations from all entities, and return on capital. Exclude any retirement contributions and benefits. So that would be the partner compensation numbers. Row 195 and 196, we're looking for an average compensation number for newly admitted non-equity partners in 195 and equity partners in 196. In 197 and 198, pretty self-explanatory, the highest equity partner compensation and the lowest equity partner compensation. In row 200, we're looking for the total managing partner compensation. Just to clarify, total managing partner compensation is the total amount, not the additional amount that the managing partner gets for running the firm. So go ahead and fill in 201 through 204. Let us know if you've got an open compensation system. And continue to use the drop-down menus as you see them. Row 204, we ask if equity partners receive compensation credit for any of the items listed in rows 206 through 217. So these are some of the common factors that go into a compensation formula. If the answer is yes, give us a yes in 204 and identify which one of these areas partners receive additional compensation for in rows 206 through 217. This next section deals with equity partners only. If you're not tracking some of this information, we encourage you to consider the potential value of doing so. Here we're looking for, on the questions are pretty straightforward on this. When we're asking for the number of equity partners who retired during the fiscal year on row 220 or 221, we are looking for total head count here and not full-time equivalent. Row 227, let me call your attention to that because this is an area that we always get questions on. What we're looking for here is the number of equity partners who are not licensed CPAs. We're not looking for the number of non-equity partners in this arena. If you've got if there's no managing partner within your firm and there's just a CEO position, give us the information in the next section on the managing partner CEO, and up above where we ask for the internal operations area there for the CEO position, go ahead and fill it in and let us know if the CEO is not a client serving partner, which is what we're looking for, or if it is a client serving partner, so we'll be able to distinguish that. So thank you for that question. All right, let's move down to rows 229 to 236. This is the section specific to the managing partner of the firm. Some firms have several people sharing the managing partner role. If so, please provide an average where appropriate, or as we're putting in here, what's the age of the managing partner? Just give us the age for the two people. Row 235, what dollar amount of client business does the managing partner personally manage? This is his or her book of business. If the managing partner is focused 100% on firm management and does not do any client work, please put in a $0 in row 235. If they do client work, just give us the number specific to the billable hours for the managing partner. Starting in row 237, this section addresses both equity and non-equity partners, so be sure to read the question carefully to see which is being addressed. We're looking for a head count here, not full-time equivalent. So please report only those people who were admitted during your fiscal year that you are reporting on. So if you've got on row 238 and 239, or row 238, if you admitted some equity partners January 1st of 2016, but you've got a December 31st year end, they would not count, so only report on those during the fiscal year. Row 239 and 241, we're asking for, of the number above, how many were lateral hires brought in by another firm, or brought in from another firm. So what we're looking for here is indicate how many people were hired in from another firm and brought into your firm directly as a partner. Row 243, if you have a buy-in amount specified for new equity partners, which is their capital requirement, what is the average amount? So indicate the dollar amount here. Row 244 through 250 deals with equity partner retirement and identifies the specifics of a partner retirement plan. Indicate if the firm's partnership agreement defines the terms for a retirement plan for equity partners. A traditional 401k would not qualify as a partner retirement plan. If you do not have a specific retirement plan defined by the terms of your partnership agreement, indicate no on row 245. Going down to rows 251 through 275 is the firm planning and governance area. This section provides a snapshot of the tools of planning and governance used in the firm. Please select yes if you have any of these tools in place in the firm. If you're unsure if you have them, leave it blank. And please note some tools are specifically indicated as formal or written. So if it's in somebody's head but it's not a formal plan, please don't say yes on that. Be sure to answer accordingly. Following the firm planning and governance section was the benefits section that we had in previous years. That whole benefits section is now incorporated in the Human Resources Survey. If you would like to get a copy of the Human Resources Survey to fill in so you can get the summary information on that, please contact us. We'll talk a little bit more about that in a moment. There are a couple of associations that we're working with who have additional questions starting in row 278. If you are with those associations and you've got some additional questions after benefits and before firm challenges, please be sure to fill out all of those questions that have been requested by the association. Starting in row 391, firm challenges, please select from the drop-down menu. We've included the answers that firms traditionally have had in the past, but if your selection is not listed, select Other and type in your issue in column C. Row 395, we're looking for the most admired peer. We honor that individual who receives the most votes, the most mentions in our survey process. So please go ahead and name a peer in the profession that you admire. This would be a practitioner who is a CPA. Under the most recommended, we're looking for up to 3 outside consultants or companies that your firm has used that you would recommend. This section is really important to help identify valuable resources that others can tap into. So if you've used any consultants at all in the past year and you could recommend them, please do so. Please do not leave this section blank. In row 402, you have an option to opt out of all IPA accolades based on this survey. IPA uses the results of the survey to identify firms for accolades such as Best of the Best, the IPA 100, 200, and 300 firm rankings. The vast majority of firms would like to be considered for these accolades, but if for some reason you don't want to and don't want to have your firm receive the recognition from IPA, you can opt out here, but we would encourage you not to. In row 403, to help ensure that all data submitted is correct and to reduce the need for clarifications, please have the managing partner, a CEO, or the CFO approve this survey prior to submission. So once you're done with that, you're going to be saving this entire thing, and then in row 404, you'll see where to send the completed survey at platgroupllc.com. So, couple of questions to address, couple of things to deal with. Let me ask first if there are any additional questions on the survey form before we get into the remainder of the session today. Okay, seeing none, let's move on to a couple of standard questions that we would normally get within from the firms. How long does this survey usually take to pull together all responses? Frankly, there is no rule of thumb to answer that. Our first response came back within 24 hours of receiving the survey. That firm had participated in the past and had set up a system to identify which reports they needed to pull the data from. If your firm has the management reporting systems in place that capture the data that is requested, you should be able to access it all relatively easily. If you don't have those systems in place, it certainly can take a little longer. Much of what we ask for will come from your time and billing system, your payroll system, and your knowledge of the various tools that you use for compensation, governance, and employee benefits. So let me kind of wrap up with a couple of additional comments. First, there is no cost to participate in this survey. All fully participating firms will receive the August newsletter, a complimentary copy of the IPA Top 100 Firm Rankings and Analysis, an executive summary of the 2016 National Benchmarking Report. This is not the full report, but is an overview and an executive summary, which is a pretty comprehensive snapshot of current trends and metrics that you can use to help manage your firm. You will be considered for accolades such as the IPA 100, 200, 300, Best of the Best, and the Fastest Growing to be named in our newsletters in August, September, and October. And you will also get preference for selection in articles written by IPA throughout the year, highlighting firms with interesting things that they're doing that others might find of interest. You will also have the opportunity to get discount pricing on the full Inside Public Accounting National Benchmarking Report. If you're with an association that's working with us, you will receive a complimentary full report. For those of you who may not have seen the report before, this is significantly different from the benchmarking survey itself. We have a number of tables that are broken out by firm size as well as by region. There's about 80 pages of tables, so significant amount of detail. Also the numbers for the best of the best inside of each one of the tables. So the benchmarking report has the tables, a number of different graphs that are giving some historical data for firms, so a lot more information than what exists in the executive summary itself. You'll also have the opportunity to order a custom IPA benchmarking report card that compares your firm's performance on critical metrics against other firms who participate, other firms close to your size, and the best of the best with a simple green, yellow, and red markers that guide you to areas that your firm is excelling in or needs improvement in. We have offered the IPA benchmarking report card for several years now, and firms that have purchased this IPA report card report to us that it's a great catalyst for discussion in partner meetings and quickly helps focus discussion on areas the firm can improve in. It's still not too late to order your 2015 financial and operational report card. So if you have any meetings coming up or want to see what this is like, feel free to contact us. Some of you have also received 3 additional survey input forms, which include firm administration, human resources, and information technology. These are 3 additional optional surveys that IPA has developed to delve deeper into these areas of practice. Deadlines for all 3 operational surveys is June 3rd. And again, there's no cost to participate in these surveys, and you will receive a complimentary executive summary when all of the data has been compiled later this year. If you don't have these surveys and would like to participate, please contact us and we'll be happy to send them to you. We have a full report for these 3 surveys that are available for purchase as well, and For the 2015 survey, you'll see a pretty comprehensive table of contents of what is included in the survey form itself. And like the benchmarking report, the national benchmarking report, we've broken it off into a number of tables with the same firm size and regional information. So some great information available for you in firm administration, human resources, and the information technology report itself. So that's the end of our session today. Thank you again for joining us, and thank you for your participation in the IPA survey. Your participation helps make this one of the largest map surveys available to the profession, and we really appreciate the trust and confidence that you've placed in our firm to deliver the gold standard in benchmarking to you and to the profession. This presentation will be available for download, and we will send you a follow-up email with the link, and it will be available on our blog. So if you have any questions that have not yet been answered, feel free to contact us at survey@plattgroupllc.com. And as you are going into filling out the survey form itself, any questions, please get in touch with us. So thanks again for your time today. Hopefully you found a lot of value in this conversation, and hopefully this will save you a lot of time as you fill in the IPA survey this year. Have a great day.